Well, sorry for posting a little bit later than I normally do on Friday, but had to get some Christmas shopping done, take advantage of some of the deals. I'm sure you probably were too. So we had an abbreviated session there on Friday, but the market is doing what I thought it would do, and that's moving to new all-time highs and moving towards that upper boundary of the rising wedge. We'll look at it. The Dow was up 100 and almost 89 points, up 0.42%, just under 0.5%. S&P was up just over 0.5%, 0.56. Again, like trading volume this week, a short trading week, and an abbreviated session on Friday. S&P up almost 34 points, up just over 0.5%. NASDAQ was up 0.83%, and the Russell was up 0.35%. The VIX was down 0.28% at 13.5. Well, peak a stinking boo. The S&P finally reached the high end of the objective target in the monthly time frame. We already hit the low end of the target at 57.50. We've now reached the upper end of the target level, high end of that upper target level at that mid 6,000 area. We hit 6,044. I'll be talking more about this in this video. Hit it the last day of the trading month for November. What does that mean for December and January going forward? Please support the channel with the link directly below that allows me to be able to provide you this information. To charts you like the indicators, please support the channel. Follow the link below to take you to a secured site. You can donate any amount you want, a recurring donation. If you do that, I thank you. You can take a moment to step up to the plate and help out. I would really appreciate it. Do need to hear from you. I don't have any sponsors, just a direct relationship with you. If you could take a moment to partner with me, I would really appreciate that. I don't have sponsors because I turn those offers down because I don't want to sell you stuff. Consider helping out today. Thank you for your consideration for that. Everybody's distracted with Black Friday, the Thanksgiving holiday, and family and friends and relatives. S&P is reaching its target. More about that in a minute. But we're very close, and I think things like momentum, quick completed diversions, we can overthrow the upper boundary of the Bollinger Band there, and again reach these levels. See another divergence complete here on the MACD. RSI, again, maybe, or maybe it just moves to an extreme, but again, I'm going to be looking at these trend lines going into next week. Move closer and closer to recession. The odds are now increasing. We didn't see the objective target reached until the very end of November now. The S&P 500, you got a good chance that we're going to see peak and a reversal in December. I think we're going to see it, or at least have a good chance of seeing it in December, possibly January. But again, before the recession hits, the market's going to peak out and it's going to start to sell off. The recession is coming. I told you if we didn't reach monthly trend line in November, which we did do the very last trading day, again, it could drag on monthly time frame into December. But like I said, I think we can overthrow that monthly trend line and hit this trend line here and the one in the weekly time frame, heading towards, again, the high 6,000 area or on into the 6,100 area. These trend lines on the weekly and daily time frame, these are what I'm watching. The monthly has got these negative divergences all over the place. Here we have multiple points of divergence on the RSI. These other divergences have led to major sell-offs. Now we have, again, another lower high that's developing in the monthly time frame as we're slamming up into the long-term channel back nearly 100 years. Now this channel right here is from the 2009 low. Again, this was a 2022 peak. We came down, we dropped below the moving average, which is what is going to have to happen to start a reversal, but we bounced off the 50-month moving average. If we start losing the 10-month moving average and then we take out the 50-week and we take out this trend line right here, that will validate the end of the bull market, validate a new bear market when we start taking out that 50-month. Over here we took out the 10-month, the red line, and it was validated when we took out the 50-month. Over here, that was a bear market after the 2007 top, and with the financial crisis and the bursting of the tech bubble at the 2000 top, again, and notice these divergences that mark the top. This is a multiple. This is going to lead to a major sell-off. Same thing over here. We lost that 10-month moving average, and then eventually went down to the 50-month, bounced and lost that. And again, you got a bigger sell-off. So that will validate dropping below the 10-month and then taking out the 50-month and breaking this trend line. That will validate the bull market is over, because we bounced off of the 50 here, and here. We violated it with the pandemic sell-off, but we rebounded. And here, over and over, we found support at the 50-week. We take it out and we take out the trend line. Then it will validate the termination of the bull market and ushering in of a brand new bear market. So we'll be watching that. But again, the divergence is here. And right now, on Friday, we're slamming into that trend line in the monthly time frame, long-term monthly time frame. This is a shorter term, even though it's multiple years. Recession coming, this trend line would take us up towards 10,000. Unlikely in that recession is going to hit. And when recession hits, you see this. Now, every divergence has led to at least a 17% sell-off. Didn't have a divergence in 2011, but again, dropped 21%. Is that a bear market and it's over? No, just a big sell-off, crash move in the larger bull phase, as these others big sell-offs were. But again, the next sell-off will likely lead to the ushering into the bear market. We in fact break the 50-month moving average, which again, we're going to be at much lower levels by the time that happens. By the time it's confirmed, things like price oscillator and other indicators, negative divergence is just all over the place here in the monthly time frame. And it's official. We tagged the upper boundary of the long-term channel on Friday on extremely light volume, but we closed out the month strong. To be watching, do we get a strong close? Do we, go up and reach that level and turn off of it? We only reached it. We hadn't reached it until the abbreviated session the day after Thanksgiving. And again, here we are. So again, could we overthrow it? Reach the trend line on the weekly chart in the upper boundary of the rising wedge? I think that's likely. I think that's probably going to be the case. Again, two trend lines. This one was at 5750. This one was at the 6,000, that mid 6,000 area, and we reached that. Whoops, it moved on me there. And we reached that. We reached that with Friday's session, and that came in at 6,044. I told you it was around the 6,040 area, just eyeballing it right around that 6,040 to 6,050 area, and we hit it right at 6,044. So right on the nose. Now, we reached the other target level, 5750, and we got a topping tail. There was no confirmation, no fall through. My signals were warning we were going to rally further in November, at the beginning of November, with the election. We talked about that at the time. 60-minute charts on the daily charts with the 50-period and horizontal support being tagged. So I told you I was watching this trend line. We're now there. Here we are. We've reached it. Could we overthrow it a bit? I think that's likely. Reach the trend lines on the daily chart and the weekly chart. So I'll be watching to see if we start getting a reversal off here. Again, we may go a little higher. The Dow has, but it's unlikely that we're going to get above this trend line and be able to stay above it. Likely we're going to see a top. Here's a long-term channel. Now, this goes back nearly 100 years. Again, the 1929 high to the 2000, and then right now. Now, again, I had the red trend line excluding the shadow in 2000, okay? And that came in at 5750. We overthrew that, and I told you one of these two trend lines is going to be tagged before we reach that first target, that lower end of the target. Now we've reached the upper end of the target, and I've talked about overthrowing the trend line, overthrowing 6,040, mid 6,000 area, and moving into 6,100 if we overthrow this level a little bit, which again I think is possible, or going to the high 6,000 area just as possible. Again, getting closer to that trend line in the weekly time frame. But here we are. We have reached it now. We have reached the objective target, and just as it's not quite done, but I think we'll likely see At least the odds favor, now that we've reached the objective target, the very last trading day, the abbreviated trading day in November, I think the likelihood of a peak in December is very, very high. Odds are starting to greatly increase, now reaching this level that we could see a peak in December or in January. I think there's a strong possibility we start seeing a big sell-off ahead of Inauguration Day. Like the 2000 top, we're very, very similar. Now let me say this. We know the SOM rule has been triggered in July. We know that, again, right around 6 months, maybe a little bit less, maybe a little bit more, maybe 3 months to 6 months to 9 months, these recession indicators start showing up when they start being triggered. That recession soon follows. In January, it will be 6 months. We saw the SOM rule triggered in July. A little bit less than 6 months, maybe a little more. I think the odds greatly favor that you're going to see recession the first quarter of 2025. Maybe it shows up in December of 2024. Don't know it yet. Now move into December. What's going to happen? We have the uninverting of the yield curve in September, nearly 3 months ago. Also warning, we're about to have a recession. That we've reached the target level, I think the odds are starting to increase very, very high odds. As we move closer to that recession, we're going to see the market top. We're now reaching the objective target. I think there's about a 95% chance you're going to see a top in December. If we don't see it, if we overthrow this level and we don't see a top in December, I think that there's probably about a 99%, 98, 99% chance that you're going to see a top in January. I think there's a 100% chance that we're going to see a top in the first quarter of 2025. Waiting for this target to be reached. It's now being reached. Now, again, we can overthrow that. I think we probably will. But I think reaching this level and probably overthrowing it soon, it going probably into the high 6,000 area, or maybe on into 6,100. Again, I think now completing this blow-off top. I'll be looking for a reversal in this area, but like I said, I think we could overthrow this area. I'm watching the upper channel line in the weekly time frame, upper boundary of the rising wedge on the S&P in the daily. The blow-off top has created so much complacency, nobody thinks possible. See a reversal. Oh, Fed won't let that happen. AI, this time's different, and all the other things that we hear. We hear it over and over, just like back before the bursting of the tech bubble, that, again, tech stocks and .com stocks, they were going to change everything, and time is different. It's the same things being said. Look at the vertical move that we've had. Markets end with blow-off tops, and that's what we're getting right now. Just get this vertical move, come right into resistance. And like I said, I believe, listen carefully, I believe we're likely going to overthrow this level a little bit. And I'm looking at that weekly upper channel line talking about, and that upper boundary of the rising wedge. Video will form a right shoulder. Watch the video all the way through and you'll see that. I think the S&P, the targets I'm talking about, again, we have reached the high end of the objective target, but as I've said over and over again, video after video, overthrow this level and move into the high 6,000 area or on into 6,100. But we have reached the target. We've already reached the low end of the target. Now we've reached the high end of the target. I think we're going to overthrow the target, as I've said. Could take us on into the 6,100 area. The odds, now that we've reached this target, seeing a stock market peak, S&P 500 have greatly increased. There's about a 95% chance you're going to see a peak in December, with the recession signals being triggered. A 98, 99% chance for January, I think. If we don't see it by January, that first quarter in 2025, I think the odds are about 100% that you're going to see a peak in that first quarter if you don't see it by January, December, or January. Nobody thought in 2007 that we were in recession in December 2007. The Fed had just started cutting rates. Stock market had peaked and was starting to sell off. Worry was that we were now starting to see signs of economy weakening. And again, recession showed up immediately in December. Fed panicked in January, did an emergency cut. Say they're making a monetary policy mistake. They should be slashing rates right now. They're not doing that. Doing the same thing they did back in 2007, focusing on inflation. I think the odds are very high. We're going to see a turn in this neighborhood or just slightly above this area is what I think. There's so much complacency and the blow off top and the strength as a bulls to think they're indestructible. As a bears, see short squeeze after short squeeze, bears, they throw in the towel. That's where you get your tops, and that's where we're at right now. So again, I think the odds are greatly increasing. We're going to see a peak and a reversal in December, and if not January. I told you to be watching to see if we get to this level in November. We only got to it the very last day of November on light volume on Black Friday when everybody was gone. So I think that we're likely going to go a little bit higher. That weekly trend line I've been talking about. Reaching this level, again, I think greatly increases the odds. This long-term trend line, again, it's likely we're going to reverse off of it, not get above it and just keep going. I do think we are going to overthrow it. I think that odds are really, really high for a December reversal because we did not get it in November. We only tagged it and closed right at that level there, just tapping it and turning down off of it slightly here in the month of November, closing it out. Very high odds for reversal in December now, January, because we did not get it in November. We tagged it, slammed the brakes on there the last day of trading when everybody was gone. I also want to remind you that, again, in the monthly time frame, we got a 13 followed by a 9. We got the 9 count couple of months ago. Again, each bar, you only get one bar per month, okay? And again, with the 13-9, the 9-9 over here, it is a reversal pattern. We got the 9 count here, went a little bit higher, but then we ended up turning. We dropped 27.5%. Now, this is likely going to produce a reversal. But you do have the 9 count, or the 13 followed by the 9. You've gone a little bit higher here. The 9 count, all just under these long-term trend lines. We've now risen up to these trend lines, and again, like I said, I think we'll probably overthrow them, but then I think we're going to turn. A very good chance with the negative divergences on the monthly and the weekly charts that that happens in December, now that we've reached the objective target trend line right here. Again, let me be clear. I think we're probably going to overthrow this level into the high 6,000 or on into the 6,100 area, but then I think we're going to turn. This is telling us the time is short. You're hitting a major trend line of resistance, 100 years old, and you have this potential double sequence count reversal pattern. Prices are really tired. Getting our blow off top, which is usually how bull markets end. Well, the GDP, it's still strong, and employment rate, it's still low. As recession indicators are flashing, again, markets top on good news. They bottom on bad news. Most people don't understand. Now, I'll post another video on the NASDAQ, and you want to watch this because, again, I'll tell you the warning sign I'm watching for with the NASDAQ to confirm a top, and that's with NVIDIA. So check back for my next video on Sunday. Well, NASDAQ made it down to this lower boundary of the rising wedge and maybe on its way back up to test the upper boundary. I'll talk about that, but S&P never quite made it that far. But we still have a rising wedge, and again, the pattern has expanded on both NASDAQ and S&P 500. S&P came down to the 20-period moving average in the momentum cloud here and bounced there. I talked about gap support being reached and rebounding there. NASDAQ came down to the trend line and closer to the 50-period moving average. S&P bounced off the 20. NASDAQ, as S&P went back up and filled the gap, NASDAQ had not yet done it, and NASDAQ was going to, and I thought S&P would move to new highs. Again, I think we're headed towards this upper boundary. Again, have a rising wedge. It's just expanded into a larger pattern. Again, over here we talked about a rally ahead of the presidential election results at the 50 period and horizontal support. And then over here we talked about extremes being reached 3 weeks ago there. On the 60-minute charts, I told you we were going to get a pullback. But then here at the 20, I told you, again, Personal belief that we were going to bounce and start rising towards this upper boundary. That was correct. I told you I thought we'd fill the gap. We had not reached the target. We are now reaching the target level. The S&P 500 reached 6,044 today. Again, you eyeballing it on the monthly chart, that long-term trend line in the monthly time frame was right around the 6,040, 6,050 area. I told you it looked like to me right around 6,040 just eyeballing it. We reached that level today just slightly here, the 6,040 area at 6,044. We did reach the trend line and we stalled there. We turned off of it and we closed at 6,032. So we pulled back just a little bit off of that trend line in the monthly time frame. Again, we could even overthrow it, move to this trend line here in the daily time frame. But we are up again almost 34 points today. We were up just over 0.5% on the S&P 500. Reached the target in the monthly time frame now. Okay, so again, divergences play out immediately, or we can drag it out and go up a little higher. And again, on into early December, at the Fed meeting on the 18th. And listen to me, the recession indicators are warning recession's about to hit. I thought that in 2007. It started cutting in September. 3 months later, we were in recession. The market was just in shock over it and had a significant drop of over 20%. October 11th, and by the time it dropped that 20%, the Fed came in with an emergency cut, as I talked about last week. Probably going to see the same thing happen here. Fed's telling us there's no hurry to cut. They're completely oblivious. Session is about to start, and I went through the economic data with you last week. And again, the uninverting of the yield curve and the SOM rule being triggered, we know that recession is going to happen. By January, 6-month marker since the July SOM rule recession indicator, reliable indicator, has been triggered. Again, like I said, a little bit less than 6 months, maybe 6 months, or maybe a little bit more, maybe 9 months. It's going to happen. But January will be the 6-month marker for the SOM rule. Uninverting of the yield curve in September. So just a couple of months ago, again, also predicting we're about to get a recession. The signals are not going to be wrong. All is dismissing them. That's what the Fed always does. They're blindsided to the recession that's about to start, just like they're blindsided to inflation. They told us it was transitory. Finally, when they figured it out, they started doing jumbo rate hikes. They're going to be doing jumbo cuts because they should already be slashing rates aggressively. Too busy focusing on inflation. Inflation's likely going to go higher, but eventually deflationary forces will kick in and it will eventually take care of inflation, as I talked about last weekend. Now, again, I think we're headed up here. If we do, you've got that upper boundary on the weekly chart. Got some divergences that could form sooner rather than later. Again, maybe it's close but no cigar, but I have the guts to tell you what I think. And I told you I thought we'd reach that upper end of the target level, which we've now done today. We've tagged the trend line. We could overthrow it and come up in here, which I think is very, very possible, and then turn and come back and break the trend line. So again, days could be numbered. Talking about the upper boundary of this channel, the blue trend line up here. Told you we had the black trend line, which excluded the shadow here, and again, connected the point here and over here. July peak, I told you back over here, we're going to move up towards it and possibly overthrow it, reach my objective target in the monthly time frame. And if we do, again, I told you we may go up and overthrow the trend line in the monthly time frame and try to move towards this trend line right here from these highs, this low, and this low, perfectly parallel, which again I think is likely going to be the case. Now for the week, we're up 1.06%. We're up 63 points for the S&P 500. But again, I think that we're likely going to hit this level, and I think there's diversions here. Again, powerful, multiple point diversions. This is what reversals are made of. Not just a simple divergence. You got a multiple diversions developing here. Same is true going on further back from this area here on the MACD. This is the area that I'm looking at right here in the weekly time frame. Going back to the S&P 500, again, we're moving to a new all-time high. I've been saying over and over, the S&P is going to make new all-time highs. The S&P is going to make new all-time highs. I was looking for that objective target to be reached at the mid 6,000 area, 6,040 to 50. That on Friday on extremely light volume for the week. There, we may overthrow it and go to the 6,100. But as we are, interesting sequence count developing here in the daily time frame. Possible divergences are under construction. And that is a sequence count right here. Very interesting. We've got this rising wedge. We've got a 13 count that developed earlier in the week. And I told you again, we might get a double sequence count reversal signal. That's a 13 followed by a 9, a 13 followed by a 9. And again, it very well could play out by Wednesday. Now, every bar has to be above the bar from 4 bars ago. Now, let me just zoom in here so you can see this. Now, take a look. We have the 13 count, and we're up to bar 6 with the 9 count. Now, again, the 13, we can get a trend extension and head up to this upper boundary, which I've been telling you that's what I think is likely going to be the case, and go up to the upper boundary of the weekly. That could overthrow the trend line in the monthly time frame. Dow is overthrowing the trend line in the monthly time frame. Maybe we see it on the S&P as well. We'll see what happens. But again, unlikely we're going to stay above that trend line on the Dow, that long-term trend line. But here in the daily time frame on the S&P 500, you got a 6 of a 9. That means 7 on Monday, 8 on Tuesday, and 9 on Wednesday if the rally can continue. I think it will. I think we'll gravitate higher. That's with the Black Friday news, Cyber Monday. Retailers do good, the rally continues. But again, I think you're going to turn right up here. And again, at my objective target. Remember, I keep saying, well, the S&P is going to move to new all-time highs. We haven't reached a target. We haven't reached a target. Now reaching the target. We reached the lower end of the target at 57.50. Previously, I told you I thought we would see that upper end of the target reached on what we were seeing there in the daily time frame. So again, a 6 of a 9 count, something to pay attention to. If we get the 9 count by Wednesday, you'll have a 13 fall by 9, a double sequence. Now we got the 9 over here. We saw this sell off here in October, just ahead of the election. We got it over here, and again, for pullbacks, this next one will likely be a reversal if it does in fact complete. My guess is we're going to see it likely complete. Like I keep saying, I think we're going to reach this upper boundary here and the upper boundary of the channel on the S&P, and I think we'll likely reverse at those trend lines. You got a pretty good shot of it. We may overthrow them, tag them in reverse, or just come shy of them, but I think you're going to move towards those areas. Probably tag them. I think that's likely going to be the case.